What if you had invested just $1,000 in a tiny startup called Uber Cab back in 2009? At the time, it was nothing more than a black car service operating only in San Francisco. Your $1,000 would have bought you 0.2% equity in a company valued at just $500,000. Most people would have called you crazy for betting on such a risky idea. But then something unexpected happened. Series A funding hit, and suddenly your stake was worth $15,000. Series B made it $180,000. When Uber went international, your investment jumped to $2.1 million. By the time Uber went public in 2019, your original $1,000 bet had transformed into $8.7 million. Early employees who bought small amounts of company stock became instant multimillionaires. Uber didn't just create wealth, it birthed an entire investment category called ride-sharing. Today, similar ground floor opportunities exist in emerging sectors like artificial intelligence and renewable energy. Sometimes the biggest fortunes start with the smallest bets. Here are 5 things you didn't know about the biggest funding mistakes in startup history. First, every major VC firm rejected Dropbox, calling cloud storage not a real business. After 300 rejections, they finally raised $1.2 million from small angel investors who saw the vision. Second, Y Combinator invested just $15,000 in Dropbox during their early days. That tiny investment became worth $250 million when the company went public. Third, the same VCs who rejected Dropbox later paid 100 times higher prices in later funding rounds. Fourth, this pattern repeated with Airbnb, WhatsApp, and Pandora. All were rejected by major firms, then became billion-dollar companies. Fifth, angel investor Naval Ravikant made $30 million from a $25,000 Dropbox investment. That's a 1,200 times return in just a few years. The crazy part? These opportunities still exist today through equity crowdfunding platforms. While big VCs miss the next unicorn, smart retail investors are getting in early. Did you know a janitor's $100,000 bet turned into over $1 billion? In 1995, David Cheriton was mopping floors at Stanford Computer Labs every night. During the day, he studied computer science, barely scraping by on janitor wages. While cleaning late one evening, he noticed 2 PhD students always working past midnight. Larry Page and Sergey Brin were obsessing over search algorithms, completely broke, but brilliant. Cheriton watched them for months, slowly understanding their vision. In 1998, he made the craziest decision of his life. He wrote them a personal check for $100,000, his entire life savings from years of cleaning and teaching. Google struggled for years, burning through cash with no clear business model. Cheriton went deeper into debt, wondering if he'd thrown away his future. Then came 2004. Google went public. His $100,000 investment became worth $1.65 billion overnight. The former janitor became Stanford's richest professor, proving anyone can build wealth with the right opportunity. Did you know the founder of FedEx saved his company by gambling away their last $5,000? In 1973, Fred Smith was 3 days from complete bankruptcy. FedEx had exactly $5,000 left in the bank, and payroll was about to bounce. Smith had spent weeks begging investors for money, but every door slammed shut. His employees would be out of work. His dream would die. That's when he made the most shocking decision in business history. He flew to Las Vegas with the company's last $5,000. All night long, he sat at the blackjack table betting everything. By morning, he had won $27,000. When the board discovered his gambling, they were furious. But that extra week of operating money changed everything. It gave Smith just enough time to secure an $11 million funding round. Today, FedEx is worth over $50 billion. Sometimes the biggest risks lead to the greatest rewards. Did you know 2 pizzas once cost someone over $800 million? On May 22, 2010, programmer Laszlo Hanyecz made history with the hungriest decision ever. He desperately wanted pizza but had a problem. He only owned Bitcoin, a weird digital currency nobody understood. So he posted on a forum, literally begging someone to accept his 10,000 Bitcoin for 2 Papa John's pizzas. Finally, someone agreed. The pizzas cost $25. It became the first real-world Bitcoin transaction ever recorded. At Bitcoin's peak, those same 10,000 coins were worth over $800 million. That's roughly $400 million per pizza slice. But here's the thing, without Hanyech's sacrifice, Bitcoin might have remained worthless forever. His transaction proved digital currency could work in the real world. Today, Bitcoin Pizza Day is celebrated every May 22nd by crypto enthusiasts worldwide. One hungry programmer accidentally created the foundation for the entire cryptocurrency market. Sometimes the most expensive mistakes change everything. What if you had invested just $1,000 in Microsoft's IPO on March 13, 1986? At $21 per share, you would have bought 47 shares of an unknown software company. Most people would have forgotten about this small investment completely. But over the decades, something extraordinary happened. 9 stock splits turned your 47 shares into 6,016 shares. When Windows 95 launched, your stake was suddenly worth $50,000. The internet boom pushed it to $400,000. The cloud computing revolution made it worth $1.2 million. Today, those shares pay you $24,000 in dividends every single year. Your original $1,000 investment now generates more than most people's salaries. Early Microsoft employees who put small amounts into employee stock purchase plans became multimillionaires. They understood something crucial about technology investing. The same opportunities exist today in emerging sectors like artificial intelligence and renewable energy. Patient investors who recognize these patterns can still build generational wealth. Here are 5 things you didn't know about Nike's insane wealth creation story. First, Nike's founders made only $8,000 their entire first year selling Japanese running shoes from their car trunk at track meets. Second, Phil Knight borrowed just $50 from his father to start importing shoes, operating from a garage while keeping day jobs to survive. Third, that iconic swoosh logo that's now worth billions? It cost them only $35 from a design student at Portland State University. Fourth, their first major athlete endorsement wasn't a superstar. It was just a college track coach who believed in their vision. Fifth, they nearly went bankrupt 3 times before going public. But here's the mind-blowing part. When Nike finally went public in 1980, company secretaries became millionaires overnight from their stock options. Early employees who stuck around saw their shares become worth tens of millions of dollars. This proves that joining the right startup early can create generational wealth, even outside the tech industry. Did you know a 21-year-old college dropout turned $12.7 million into $9.4 billion for one venture capital firm? In 2005, Mark Zuckerberg walked into Accel Partners' office with nothing but a laptop and a social network limited to college students. Most venture capitalists saw Facebook as just another MySpace copycat and passed immediately. But partner Jim Breyer noticed something different in the user engagement data. Students were spending hours on the platform daily, checking it obsessively between classes. While competitors focused on flashy features, Facebook had real addiction-level engagement. Breyer wrote a check for $12.7 million, buying 11% of the company. Facebook rapidly expanded to high schools, then corporations, growing faster than anyone predicted. By the 2012 IPO, Accel's stake was worth $9.4 billion. That's a 74,000% return in 7 years. This single investment created the template for social media investing and proved that life-changing venture opportunities still exist for those who recognize true user engagement. Did you know over 1,000 Amazon warehouse workers became millionaires by accident? Back in the 1990s, Amazon was just another startup desperately trying to attract talent. They couldn't compete with big tech salaries, so they offered something unusual: stock options to everyone, even hourly warehouse packers. Employees hired before 1997 received options worth just pennies per share. Most workers barely understood what they meant. Some almost sold their options for beer money during tough times. But those who held on witnessed something incredible. Amazon's stock price exploded from $18 at IPO to over $3,000 at its peak. Suddenly, warehouse workers who packed books were sitting on millions. One packer, who nearly sold his shares for a few $100s, retired with $8 million. While other companies hoarded equity, Amazon shared it with everyone. This created over 1,000 millionaire employees who stumbled into wealth. The lesson is clear. Equity compensation in growing companies can change your life forever. Always negotiate for stock options. You never know which startup becomes the next Amazon.